Hey, welcome back to YT Finance, and today we are talking about Palantir, Sensionics, and Nano Dimension. For PLTR stock news, we will briefly go over why PLTR has a $44 price target according to Seeking Alpha analysts. Then we will discuss the competition that SENS stock is up against, and if SENS stock is still a good play to hold on to. Lastly, we will go over NNDM stock's true price regarding what the stock price should currently be worth based upon how much cash that the company has on their balance sheet. Remember to go and press the like button right now for more NNDM, SENS, and PLTR stock news updates. Comment your price targets down below for all or any of these stocks. Turn on all subscription notifications on this channel to stay informed, and now let's get right into today's stories. The PLTR stock price has been a wild ride, with its sell-off correction in May to its bottoming out around $21 in early August, to now being worth $44 according to analysts. These analysts think that Palantir stock can reach a $44 price target sooner than expected, which is great news considering that Palantir had strong financial results coming off of their earnings report, which already puts the stock in a very bullish light. But the question now is, how soon do analysts project that the PLTR stock price will obtain $44? Well, to answer that, it depends on how bullish these analysts are in the company itself, because these analysts say that it could take anywhere from 9 months to 12 months to reach this price target. The price target could have even been higher if Palantir didn't experience some trouble in 2020 like a plethora of other companies did, for obvious reasons. However, in Q1 of 2021, Palantir had a great turning point and produced great revenues and cash flows. This success was then translated over into Q2, where Palantir beat analysts' expectations, which was great news, and it's why currently the stock is very bullish right now. Now let's talk about SENS stock, where I can provide some justification for holding the stock as a long-term speculative play. SENS is considered one of the more innovative company in their respected field, which can provide huge upside for the stock both currently and in the future as their continuous glucose monitoring system evolves. SENS is still waiting on FDA approval so they can effectively infiltrate the United States diabetes market, which is one of the largest markets in the world. So after FDA approval, Sensionics revenue should grow rapidly year over year. According to Grandview Research, the value of the CGM device market for 2021 is $5.28 billion, but that number will almost double by 2028 at a compounding annual growth rate of 10.1% to reach a value of $10.36 billion. The competitive edges that SENS stock holds over its competition is their on-body vibration alerts, their long-lasting duration of 90 to 180 days, and the accuracy of their devices. Diatribe.org says this about Eversense, and they say Eversense is the first CGM to provide on-body vibration alerts. In the event of high and lows, the transmitter will vibrate to notify the user even if the phone is out of range, a particularly useful feature for individuals who are visually impaired or have trouble hearing. However, the CGM market is extremely competitive with regards to other continuous glucose monitoring system manufacturers like Dexcom and Abbott Laboratories. The great part about this is that Sensionics is supposed to scale along with the market, so at minimum they're going to have a 10% CAGR, which is still great growth, which keeps pace with the S&P 500. On the other hand, Dexcom and Abbott Laboratories are also great investments if you want to diversify into this area. It's a really great strategy to diversify into blue chip stocks within a given industry, while you also have some speculative plays that you're holding on to, which could give you massive growth in the future, just like SENS stock can. There is still plenty of market share to go around when it comes to diabetes. Just listen to this, and I quote from the article. An American Diabetes Association survey found that 21% of adults with type 1 diabetes never checked their blood glucose. Of those with insulin-treated type 2 diabetes, 47% never monitored. And among those with type 2 diabetes who were not using insulin, 76% never checked. So CGM systems and devices still have a huge market to penetrate, which is great news for Sensionics. However, according to diatribe.org, EverSense is very accurate, but it still needs 2 fingerstick calibrations a day, unlike its competition. And again, this is the Achilles heel of SENS stock. If SENS can rid themselves of finger pricking, it's going to be a game changer for them, because both Dexcom and Abbott have systems that do not require finger pricking. So that one change can literally put Sensionics on top of the entire market, because they do have the longest lasting CGM system on the market. The company is currently working on a system that only requires 1 fingerstick calibration per day, but we really need that to be 0 for them to be extremely competitive. Now we're going to move on to Nano Dimension and talk about some NNDM stock news. According to Nano Dimension's second quarter earnings report, which was on August 18th, they have almost $1.4 billion worth of cash on their balance sheet. What's funny about this is that Nano Dimension's current valuation is about $1.5 billion, so it's only about $140 million off from the amount of cash or cash equivalents that they have on their balance sheet. And this is great news because it ensures that if you buy NNDM stock right now that you are not overpaying, but we will calculate exactly what the stock price should be to equate it to the $1.4 billion worth of cash or cash equivalents on their balance sheet, so you know that you're going to get a great deal. The funny part is, when I started to do the calculations of how much the stock price would be worth, I tried to find out their current outstanding shares, and on May 10th, they said that they had 256 million shares outstanding. But according to the quarter 2 earnings report, where the net loss was $13.6 million in the income statement, and the basic loss per share was 5 cents per share, so if we divide those two things, we get an implied number of shares of 272 million shares outstanding. So I was intrigued where these extra shares came from, because there's about 13.55 million more shares than they reported on their last report. That's about an increase of 5.24%, which is enough to cause a little dilution. So where did these extra shares come from? Well, I figured out it could be from a plethora of things, and where I think they're coming from is exercised warrants. Or another way this could happen is it could have to do with acquisitions and issuing shares for that, but we have to remember that this is an Israeli ADR company, so this company is not required to file a 10-Q report every quarter. They also did not provide us with a cash flow statement, so we really don't know the cash burn rate of Nano Dimension currently. But back to the major question, and that question is, what should the stock price be according to the amount of cash and cash equivalents that they have on hand? And the answer to that question is $5.13. So if you can get this stock anywhere around that at the current time, that's going to be a steal. At least it's a good deal from a value perspective, but even if you can get the stock price close to that price point, it's going to be a great deal because you can write off the difference because of the massive growth that the 3D industry is going to experience within the next 10 years. But I want to hear your thoughts down below about NNDM, PLTR, and SENS stock. Don't forget to like this video right now, and I will see you in the next YT video.